All right, let's go to the good news today. Inflation falling to a 4-year low in the December quarter, down to 2.4%. The trimmed mean or underlying inflation, it also fell, but it still sits outside the RBA's preferred band of 2 to 3%. Now, there's a meeting in February. What's going to change, if anything? Let's bring in someone who's got a good eye on all the details. Sky News Business Editor Ross Greenwood. Ross, good news, headed in the right direction. Underlying figure still higher than the RBA would like. So how likely is it we'll see a rate cut in a couple of weeks' time, do you think?
Well, it was almost a rush today by economists to try and change their forecasts as to when the Reserve Bank will cut rates for the first time. The majority are saying now that they'll cut in February, in 3 weeks' time. So they say there's enough evidence of falling inflation, of falling prices to really justify rate cuts coming sooner than even that underlying rate going back between 2 and 3%. So you can see here, before that inflation number today, there was about a 2/3 chance, according to money markets. So this is basically looking at where the money market rates are, about a 2/3 chance that there would be a rate cut in February. But as soon as that number dropped, which, as you say, came in at 2.4%, the headline rate, the underlying rate, 3.2%, it jumped to 75%. And I can tell you that even just looking at it now, that's even increased further to just under 80%. So given the fact that money markets are suggesting that, you'd go with the money and suggest that the Reserve Bank most likely will cut rates. But just one other little piece of evidence for you that quite clearly inflation is now, or high inflation is now clearly behind us. The last 2 quarters have delivered inflation of 0.2%. So if you consider that over the past half year, that's about 0.4%. If you go forward, you can see that inflation will drop really quite sharply. Now, to explain to people, this is not actually prices falling necessarily, but what it means is at least you're not going to get the big increases that you've seen previously. Though in this last quarter, there were falls in the price for transportation, that's petrol prices coming down, and also even home building, accommodation coming down, that's rent starting to ease off from their very high rates in the past, and education prices, they were pretty much flat during this time. So for some key elements for households, certainly the worst of the price rises are behind them. And then if you add on top of that the likelihood that the Reserve Bank will cut rates, there is something relief coming, which is what the why you saw the Treasurer today saying he was cock-a-hoop about it, saying Australia is in for a soft landing, whereas on the coalition side today basically saying, well, look, you know, the pain is still there for the community, and I think that is real. But then, you know, sort of it's going to take some time before really many of these big price rises really do start to take away the sting that's been there for the past year and a half or so.
Yeah, I'll leave it there. I will mention too that analysis from Deloitte saying that we'll get, you know, we're in tough territory in terms of living standards, they predict, until 2030, and our rate of government spending is still at record highs. I think all of that's feeding in. I know the governor wants that government spending to come down. I think in an election year that's not going to happen, but we'll see. Ross, thank you.